for the Aussie Canada. If the ATR is 67, what I want to do is make sure that I'm at least one ATR above the swing high of this current pullback to give the trade breathing room. So if up to that high is 30 pips, as you can see right here, this is up to the swing high, then I need to add 60.
That's not how you do it. Fuck. Where did he get it though? What did he use? Oh, this.
Seven pips to that. That would be a 90. Seven pip stop loss. Now I know that I said we shouldn't be looking past levels of support. Like this in order to take targets, but in this situation, let's just do it anyway. And with that being the case, I may say something like, I expect this in terms of targets, right? This was how I use it for stops. I make sure that I'm at least one ATR above the swing high or below the swing low if I'm shorting versus going long. Now, for targets, I may say I'm expecting the market to move 2 times the ATR indicator. So what's 2 times 67? 134. So now I can have a 134 pip target. And again, this would work better if there wasn't a level of structure in the way, but for the purpose of the ATR indicator, just go with it. And that sets me up with a 1.4
How did I just buy it? Oh, trade, so you can just buy a new thing.
To 1 reward to risk ratio. This is how one of the ways that I would use the ATR in order to place stop losses. Another way you can do this is by simply, this is a more simple way, is by saying, okay, I want a stop loss that is 2 times the ATR indicator from my entry. So that would be 134 from entry, right? And in order to get a 2 to 1 reward to risk ratio, I want to have a 4 times ATR indicator for my target. 134 times 4 is 268, and that would be a 2 to 1 reward to risk ratio. And that would be the way your trade setup looks. At this point, you're giving yourself room for your stop loss, and you're accounting for the volatility of the market in terms of finding targets as well. Those are the 2 ways I like to use the ATR indicator. Let's now move on to the next favorite indicator that I have, the second most valuable in my opinion, which is moving averages. Moving averages are exactly what they sound like. It is the average movement of price over a certain period of time. So the red line you see on the screen right now is the 20 period moving average. What that means is that this indicator took the closing price of the last 20 candles and then divided that number by 20 in order to plot this line on the screen. If this moving average was to be 50 periods or look back period or length, whatever it's defined as in your trading platform, it may be slightly different. If it's 50 though, what does that mean? That means that this indicator took the closing price of the last 50 candles, divided that by 50, and that's how you get this line on your screen right here. Now, in order to plot this on the chart, it should be self-explanatory, but you just go up to
Let me cross.
indicators. Here on TradingView, it's very easy. You type in moving average without that weird vocal tone, and then you go down to
Dude, why is it componental?
moving average and just plot it on the chart. Now, there are
I don't have regular moving average. It's okay. Let's use the other one.
without that weird vocal tone, and then you go down to moving average and just plot it on the chart. Now, there are three main ways I use moving averages. Let's go ahead and dive into those right on swing highs and lows. Way to what
Wait, what did you have? You had
should be
50?
Self-explanatory, but you just go up to right here. Now, in order to plot this on the chart, it should be self-explanatory, but you just go up to indicators. Here, price. You get this line on your screen right here. Now, in order to plot this on the chart, it should be self-explanatory, but you just go up to divided that by 50, and that's how you get this line on your screen right here. Now, in order to plot this on the chart, it should be self-explanatory, but you just go up to indicators. Here on TradingView, it's very easy. You type in moving average without that weird vocal tone, and then you go down to moving average and just plot it on the chart. Now, there are three main ways I use moving averages. Let's go ahead and dive into those right now. The first way that I like to use moving averages is to help me define trend. So earlier in the video, we talked about candlestick charts and a defining trend with swing highs and lows. As I said about indicators earlier, though, indicators are there to help you clarify what price is actually doing. So a moving average is a great objective way to define trend. The way you would do that is if price is trading above whatever period moving average you choose. For short-term trends, the 20 works great. If price is above the 20, then I am in an uptrend. And I'll do an example on the screen now for if price is below the 20, then I am in a downtrend. And that's the way we would use a moving average, a single moving average. Now that's the way we would use a moving average, a single moving average, to help us define trend. And the way we would trade based around that is we only look for buy trades while price is moving and creating new highs and lows above the 20 period moving average.
So this is the 20 period. So let me see. So this is above. Oh, let's see with the downtrend right here. This is up. Kind of an uptrend right now. Count has been in a downtrend. It's above the price. So I'm thinking it's in a uptrend. Let me write that down.
Fuck, I have to end stream.